There's a lot happening all over the globe. We have stock market servers that are crashing all around the world. Goldman Sachs, which is going to be starting a Bitcoin trading desk for Wall Street insiders and institutional investors. And we have Max Keiser, who says that you should only leave enough money in fiat, which you're willing to lose. Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, interviews, and ICO reviews. Thank you for showing up. Tap that like button. It really supports us and it helps other people find this content. Also, if you have any questions or comments, leave those in the comments box below so that your voice can be heard as part of the community. In today's episode, we have a lot to go over. We're going to be talking about some of what we talked about in the last video, and then going to be going over some new information. There's a lot happening in this world. Cryptocurrencies are starting to kick up and have new life breathed into them, just like they did 1 year ago after tax season and around this time inside May, after the May consensus event in New York City. We really see a lot of interest in cryptocurrencies going into the summer. A lot of people are expecting that pattern to repeat again, and a lot of people are expecting Bitcoin to go up, for Ethereum to go up. We're hearing new crazy predictions talking about a $15,000 Ether and a $50,000 Bitcoin. And, you know, we can be sure that in this market, the prices are going to go up, the prices are going to go down. It could go to $1 million bucks, it could go to zero. But with the dynamics and the economics of Bitcoin, with Bitcoin being so big, so decentralized, and people being really concerned about fiat, really concerned about the economic situations in all of the places around the world that people live, let it be first world countries or third world countries, people are starting to recognize that Bitcoin is an asset class that isn't going away. Bitcoin is a part of an asset class which is going to be very important in everyone's lives moving forward. And the people who understand this sooner than later are going to be able to give themselves an early mover advantage in this blockchain technology, in Bitcoin specifically, as people continue to debate how much of a fraud Bitcoin is, how much of a Ponzi scheme Bitcoin is, as it continues to escalate upward in this exponential rise toward wherever it's going to end up 5-10 years from now, you know, depending on who you ask, let that be John McAfee or Jamie Dimon. And as we're going to see in today's news, Goldman Sachs is putting their bet that Bitcoin is going to be big in the future, offering Bitcoin to their investors, to Wall Street insiders. There's a lot to go over. So with that being said, let's dive into the news and let's discuss. So real quick, if you saw our last video, we talked about how there was this very loud noise that knocked out the NASDAQ stock exchange computers across all of Northern Europe. And so there was this high decibel whistle that for some reason went off as a part of the fire prevention system where these servers are. And when the fire prevention system went off accidentally, because there was no actual fire, it created this huge, large decibel sound is what they're saying. And this huge sound knocked off all of these servers for the NASDAQ stock exchange servers across Northern Europe. And that's what we talked about in the last video. Well, since that last video, we had since found out that in Toronto, the Toronto Stock Exchange was also shut down due to a hardware failure that made it so people were not able to trade on the Toronto Stock Exchange for a few hours on Friday afternoon. And the stock exchange servers were subsequently down for 3 days. So this happened early Friday afternoon. The Toronto Stock Exchange was shut down early Friday, and it continued to be down all day Saturday, all day Sunday. So then the Toronto Stock Exchange planned to reopen the following Monday after they were able to replace the hardware, put in new infrastructure to prevent the issues that they were having. So this is just really interesting that in multiple stock exchanges around the world, multiple cities, multiple regions around the world, where we are experiencing these system-wide failures, shutting down stock markets for whole ranges of people and companies and institutions. And we just think it's really interesting that whenever we hear news like this happen, and wanted to see what you think. What do you think about the Northern European stock exchange servers, NASDAQ servers going down across Northern Europe? And then a week or two later, seeing that the stock exchange in Toronto had also gone down. Very interesting. Love to know what you think. So pivoting from the stock exchange servers and looking at Goldman Sachs and what Goldman Sachs is getting themselves into, they are now saying that Bitcoin is not a fraud, and they're planning a trading exchange for Wall Street, for institutional investors. And this is going to be a move that's really going to set Goldman Sachs apart. They haven't been as becoming as Jamie Dimon and giving all sorts of rhetoric against Bitcoin. They've been a lot more reserved, probably because in the background, they know that Bitcoin is going to be up and coming. They know with the next market correction that people are going to be flocking to Bitcoin. And when those people start moving toward Bitcoin, Goldman Sachs wants to position themselves to be able to take advantage of the Bitcoin exposure, take advantage of the stampede that's going to be happening toward Bitcoin. And Goldman Sachs is also going to be having this near first mover advantage, allowing them to really cater to this new marketplace. And what Goldman Sachs is saying is that this is not a new risk that they don't understand. It's just a heightened risk that they need to be extra aware of. What's most interesting in this article is that Goldman Sachs, even though they're moving forward with Bitcoin, they're being very bullish with Bitcoin. They don't want anyone to think that they are huge Bitcoin believers. They don't want anyone to think that they're in the position of thinking that Bitcoin is going to take over the world. They're just in the position of thinking that they need to get involved, they need to create systems, and they need to take advantage of the situation. So it's a little bit of lip service, if you ask me. They're saying that it's not a fraud, but it's not very big and very important, but they're spending a lot of time and money to position themselves, just in case. Kind of saying one thing with one side of the mouth and then doing something and telling people what they're going to be doing with the other side. We'll see how their position continues to pivot as it has over the past 12 months. Typically, when people are talking about Bitcoin and people are saying what Bitcoin is and how to get involved in the Bitcoin, some people are talking about Bitcoin in terms of the financials, and some people are talking about Bitcoin in terms of the technicals and the infrastructure and how this is going to change the relationships between people and companies and Internet of Things and all that sort of jazz. And so when people are giving recommendations or talking about how to get into Bitcoin, typically they're saying, don't put in any more money into Bitcoin than what you're willing to lose. A lot of people are hesitant to give financial advice because you're not able to give financial advice unless you're a licensed financial advisor. So it's really interesting now when we're seeing quotes from Max Keiser. We're hearing more and more from Max Keiser, who is very bullish on Bitcoin, talking about Bitcoin cryptocurrencies and their relationships to the centralized bankers, the centralized system of fiat money around the world. And what Max Keiser is saying here is to only keep money in fiat that you're willing to lose. Only put as much money into fiat as what you need and as what you need to spend on your bills, and because any more than that runs a huge risk, according to Keiser, of it being lost to inflation, being lost to hyperinflation, and being lost to the possibility of if and when America and the world experiences another global correction, or worse, a recession, or even worse than that, a depression, or even worse than that, full catastrophic financial meltdown, just like we were about to have in 2008, 2009, before the TARP bailout was given, and all this additional money, huge amounts of money were printed, pumped into the society, really tampering down the risk of the economic catastrophe, but simply taking that risk and pushing it down to future generations or later in our generation. And a lot of us are thinking this is something that we could see, if not within the next couple of years, then within the next 10 years, just because of how much money is being printed in the world, how much debt in the form of derivatives there are in the world, and how the valuations inside each of these manipulated markets, let it be the stock markets or the housing markets or the gold markets, really aren't giving us truth in the numbers, truth in the situation, and it's all being held up like a house of cards. So that takes us to this tweet from the Cointelegraph and this chart here where they say first we had the dot-com bubble in 2000, then we had the housing market bubble in 2008, And now we'll have our third bubble, the central bank bubble, in the year 2018, 2019, 2020, perhaps. And so we have this chart here where we can see the US nominal GDP. We can see the sections here in gray that were recessions. So we had this one recession in 2001, this second recession here between 2008, 2009, 2010. And in the blue line, we can see the net worth of US households. And so we can see the dot-com bubble, how the net worth went up rather quickly and then decreased with the dot-com bubble boom and bust. And then we have the housing bubble with the net worth of US households increasing dramatically, and then that decreasing even more dramatically when that recession hit after 2008. And now you can see how this has been increasing again above and beyond where we were in 2008. And what could be the risk now? Is it a central bank bubble? Could it be a student loan bubble, which is also a very huge risk, a risk that is significantly greater than the housing bubble was in 2008? Whatever it is statistically overdue, since they say these sort of corrections happen every 8 to 10 years. And nobody knows if, nobody knows when, but there's a lot of people that are speculating. There's a lot of data that is suggesting. And no matter what happens in a world where we can't predict the future, it's very important that we prepare for events that we don't expect to happen. You know, the way things are, humans think that these are the way that things will always be. The 1% that we use to plan for an uncertain future, and that's the reason that we have futures, are to prepare for the worst case event, to prepare for the different events and the possibilities, especially in a world where we are not fully educated about the risks that are all around us. So this is the beginning of May. We think the next 7 months in 2018 are going to be huge. We think they're going to be significant. We think a lot of the patterns that we experienced in the past will continue. And it's really important that we educate ourselves and we help educating each other about the possibilities of what could happen. At the same time, you don't want to trust any one person. You want to verify your own information and take that verification and then to use that continue your education and to build on top of what you know, because moving into this new world, this isn't about what we're told. This isn't about what we see or what we read. This is about what we can verify. And Bitcoin is a technology that you can personally verify. You can run a full node. You can see the transactions, and you can have a say, a vote into determining what Bitcoin is and the voting for that Bitcoin and taking strength in your own power of being able to validate the network and even understand how this network works. That's going to give you a competitive advantage in this space. It's going to put you ahead of the game of the 99% of everybody else who isn't paying attention. Because with all these people who aren't paying attention, they are going to find out what happens to the value of the dollar. They're going to see a $100 bill maintain the numbers of $100 on that $100 bill. But what they are going to also see, what they're going to see instead of the numbers changing on the $100 bill, they're going to see the prices changing with the inflation, with the potential hyperinflation. And this is just ultimately putting more people in debt. And the name of the game is to get out of the debt. The name of the game is to spend below your means, to take the money that you are investing, that you are putting yourself into debt with, and use that to make your family, your business, your life more efficient so you can actually get more out of the services that you consume, more out of the products that you consume, and ultimately retain more of your wealth instead of seeing it slip away through this mass theft called inflation. And it was really difficult for people to have any hope, for people to have any solutions. But what happened is that Bitcoin started existing after 2008 and the housing boom, the bust, the banks going under, banks getting bailed out. There wasn't a cryptocurrency, a decentralized asset for people to get into. Gold was interesting, but the gold markets, a lot of people speculate, are highly manipulated since no one really knows how much gold is in the world. Whereas Bitcoin, it's all cryptographic. It is all on a blockchain. Everyone can see everything inside the Bitcoin network, and we can all validate for ourselves. We can all see the Bitcoin, we can follow the Bitcoin, and we can go as far as we want down this rabbit hole as we want to get involved in. But some of us are going to jump in that rabbit hole a lot sooner than others. So with all that being said, I'd love to know, what do you think? Let me know in the comments below. What do you think about these stock market servers that are crashing all around the world? What are the chances that bank accounts around the world could crash on a Friday and then reopen on a Monday, and then having a new system of money in place? What do you think about Goldman Sachs offering a Bitcoin trading desk for institutional investors, but at the same time, they're trying to tell people that they don't think Bitcoin's going to take over the world. They're just preparing for just in case. And what do you think about Max Keiser saying that the only money that we should have in fiat is just the money that we're willing to lose? Do you think having your money in fiat is a greater risk, or do you think having your money in Bitcoin is a greater risk? I'd love to know what you think. Share those comments in the notes below. Tap this like button on this video. Subscribe if you haven't already. And until next time, I'm glad that together we are minting coins.